Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with your market recap for the week ending May 19th, 2017. Rather interesting week, finally, and I'll get to that in a second as far as the grains are concerned. But we continue to see a very choppy trade. I think for the week, corn's up a penny, beans are up 3 cents. And beans are down around a dime. So very choppy trade. And just to put that in perspective, we went back and looked at some numbers, and I believe since the 1st of October we've had roughly 150 trading days. And of that, on July corn, we've had 24 days where July corn is closed above 280 and 2 days below 260. So far for the 2017, the monthly average trading range on corn has been 20 cents, which is the lowest since 2001. Go back to 2012, our daily trading ranges back in 2012 averaged about 18 cents. So lack of volatility in the markets continue. We'll see if anything can move that needle as we go forward. As far as this week, the change, or somewhat of a dramatic change to some degree, was on Thursday in Brazil, when political drama, not only here in the U.S. but in this case in Brazil, had some pretty negative impacts on the currency in Brazil, the Brazilian real, which dropped about 8% in one day. This was all in the story of President Temer. Encouraged some businesses to do some payoffs, if you will. So that added a tremendous amount of drama to a country that's had a lot of political turmoil historically anyway. The currency dropped a bunch, which gave Brazilian producers the best opportunity to sell beans in like 3 months from a price perspective because of the drop in the currency. And supposedly, Brazilian farmers sold on Thursday 75 to 100 million bushels of soybeans. Keep in mind they've got a record crop. As of Thursday, by some analyst estimates, Brazilian farmers still had roughly half of their soybeans left to sell. Historically, about this time frame, they're down to 70% being sold. So that was the dramatic impact with the break on Thursday. Now we did see some return of that break today. A lot of that's just due to the weakness in the U.S. dollar, which is basically at low since we've seen since the election. And much of this break in the dollar, I think, concerns that with the drama in Washington, that Trump may not be able to put through as quickly some of his economic plans, stimulus plans, tax changes, etc. So that's put a little halt on that, and thus put some pressure on the dollar. As far as the grains are concerned, one thing we continue to emphasize going forward, especially on the corn, we still have to remember we also have a record crop here in the U.S. with a tremendous amount of corn that's still on the farm or still in farmers' hands. The big thing going forward, the risk, is basis, in our opinion. Now, once planting season is behind us, once the farmer sees the crop up and looks 120 days down the road and sees this harvest time, what happens to the impact of, without a better term, this wall of corn that needs to move to some degree going forward, and thus that could cause tremendous pressure on the basis, and a lot will depend on what the board does. The quicker the board rallies, if we do see that opportunity, I think the more dramatic pressure you'll see on the basis. So if you want to talk on how to handle that with one of the brokers, give us a call. You can look at some basis contracts with the perception of the market going higher. You can sell some cash, look at returning ownership with some options if you'd like, with a little less risk. So just something to keep in mind going forward, because that wall of corn could be interesting going forward. We say that with a little more dramatic impact on corn than we do beans going forward. One last thing on the crops and the thing looking forward, we lost a lot of the inversion on the old crop, new crop beans this week, which, bean demand continues to be very good, but with that movement in Brazilian beans and the time of year where we have that dramatic switch with the world, especially China, looking for beans out of Brazil and Argentina versus the U.S. is key going forward. As far as the markets next week, we're that time of year, so the growing season, and weather could have some influence. It may not. We keep having some conversation with slow emergence and extreme wetness in parts of the east, or some cool wet weather we're currently having again. What's the impact of that? So you have that weighing on one side, and then on the other side, most of the crop is in as far as the corn's concerned. The drought monitor maps right now look pretty benign. That can obviously change, but right now that looks benign. So the market's kind of weighing these things out, and maybe when we get into talking about crop conditions, we see the market act with a little more volatility in regards to the condition of the crop and maybe movement of this market. When you really sit down and look at yields and where do we think things could get tight to some degree, or tighter than what we've seen here the last couple of years, you probably would have to have a corn yield down in the low 160s, if not below 160, and a bean yield would need to be, say, 45 or less nationwide to tighten things up to significantly see much of a market move. As far as the livestock, as lack of volatility as we see in the grain markets, we see just the opposite in the cattle, with at or near record open interest. Funds are very long. We have a market where the cattle are very current, weights are low, being pulled ahead. On the other side, you have large placements that will show up this fall, and yet the price of boxes, the price of beef, continues to be very strong. At some point we could see some pressure there, and when we do, with futures being such a big discount to cash, maybe short term that finally see some relaxation in these futures markets, at least short term. Longer term, I guess, keep in mind with China potentially and the demand picture going forward with U.S. beef could be very key, and obviously one thing to keep in mind is the new ambassador to China will happen to be from Iowa, so that could be good for the feed demand potentially going forward. Pork continues to see cutouts up. They followed the sharply higher beef prices. From a competitive standpoint, exports in pork are up 5% on the year. Exports for beef are up 16%. Again, watch the currency, watch the dollar. The macros have been active with some of the drama in politics. That, along with weather and crop conditions going forward, are the main things we'll look at as we approach the end of May into next week. With that, it's been Clark Neighbors, BIS Commodities. If you have any questions, call us at 1-800-373-2525.